listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit. We discuss current events, financial markets, politics, sport. Little background music in there just for fun. Always love when that happens. You know it's live radio when you hear some of those things that go on. But let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. We are celebrating today. What are we celebrating? We always have to have something fun to celebrate. And today, I looked through the list as I do every morning and wanted to see what could we celebrate, what would be fun for the day to celebrate this Monday morning. I looked and I saw National Dice Day. Then I looked and there was National Sock Day. So there were some people that enjoy socks, so
what are you doing?
Yeah, I don't know about that one. Then I saw the one that had to be the hands down winner of the day. It would be National Cookie Day. Yes, indeed. Gotta love that idea. National Cookie Day. It is today. We then look at the markets. What's happening in the markets? They are booming right now. The Dow Jones Industrial Average up 229 points. Oil down 64 cents per barrel. And we look at what is that having to do with our rates. What's happening there? The 10-year Treasury. We look at that one. We look at the mortgage-backed securities. Find out what's going on in every one of these different numbers. Well, let's look and see and remember, you got to look not just at the headline numbers. That's one of the things we want to remind you of. 10-year Treasury is up 3 basis points, 2.3937 is that 10-year Treasury. Call it 2.39. That's the yield on that. And that is up a little bit. The bond itself on the Fannie Mae 30-year, it's down 6 basis points, which means rates are up ever so slightly. S&P 500 is up 13.58 right now as I chat with you. Dow Jones, though, 24,458 all-time high. And yeah, we were a little earlier today. We did get some higher numbers. I'll talk about that in a little bit. We were at 24,523 earlier, so it was another 75 points higher earlier in the day. But what's driving all of this? It's all being driven by the tax plan that's going through. The tax plan. Now, if you want to see precisely what the tax plan will do for you, for your family, I'm going to recommend go to MBElinks, MBElinks.com /tax, MBElinks.com /tax, and you can put in there the information about your household's issue, your specific scenario, I guess is the best way to, because when it all comes down to it, it's all about you. It doesn't really matter what it means for everybody in the whole world. I love listening to the liberals because they talk about what the rich are doing. Well, you know something? I'm going to share this with you right now. Who cares? The rich are going to do what the rich are going to do. The question is, what are you going to do? What's going to happen for your family? How does it affect your family? That's all that really matters. So how it affects your family, you can look and see. I just threw in a number into the tax calculator, and every time I throw a different number in there, I see different amounts of savings. So I'm going to run a number right now just for the fun of it, $75,000 household income, married, filing jointly. They do not itemize, 2 children under the age of 17. And you look at that, the House plan saves $1,586. The Senate plan saves $2,128.
More money, more money, more money.
That's the whole bottom line right there, folks. It's all about you. It's not about what it does for everybody in the world. What is it going to do for your family? Don't listen to all these people on social media who are very good at reading talking points but have no clue what's going on. Don't listen to the news media who we know all of them are biased. What happened to Brian Ross over the weekend? Got 4 weeks of vacation time unpaid because he's misrepresenting the news to you. So all these things are going on all the time, so just be aware of them and know that it doesn't matter what's going on in all this noise. How does it affect you? How does it affect your family? And then you just compare these different numbers, because if you had the personal exemptions are going up right now, the standard exemptions, the child tax credit, these are all issues that are affecting everybody. So MBElinks.com/tax. And that'll tell you exactly how the tax bill is going to affect your family, just the way it is right there. So we are moving right along. What else is happening in the news today? Let's take a look at it. We already talked about the tax plan, and that's why the stocks are soaring. You would expect the bonds to be dropping a little more, interest rates going up than they have been, but that has not happened. We're going to have a quiet news day today, but pretty busy the rest of the week. The ADP and the Bureau of Labor Statistics jobs report comes out toward the end of the week. Looking between 185 and 190,000 new jobs being created. ISM is coming out, PMI is coming out, mortgage applications, who cares, initial jobless claims every week on Thursday. So not a whole lot of excitement when we look at the markets this week. So let's take a look at what's going on in the news. You gotta love listening. You know, when whether you like him or not, President Trump does come out and just says what he thinks. 2 days after General Flynn pleaded guilty to lying to the FBI, President Trump insists that he never asked then FBI Director Comey to stop investigating Flynn. The president who fired Flynn as his national security advisor also reiterating that there was absolutely no collusion. And the president goes on to say, look what happens with Flynn. His life is destroyed for lying to the FBI, yet Hillary Clinton gets nothing at all. Does that surprise anybody at all?
Surprise, surprise, surprise.
Yeah, generally that's just the way it works.
So I know whose ass to kick.
We know that the former President Obama does not do that at all. Again, Brian Ross put forth an explosive report Friday claiming that Donald Trump was still a candidate when he ordered Flynn to make contact with Russia. Ross's report and its implications of collusion sent shockwaves through Wall Street. The Dow Jones Industrial Average dropped about 300 points during that time period, and we find out that it was not correct at all. So Brian Ross 4 weeks off unpaid. ABC News has admitted it badly botched the report. Unbelievable. Now we see that Robert Mueller's investigative staff included Peter Strzok, I cannot even know how to pronounce his name, and now he's been relieved of his duties. For Fox News reported that Strzok also took part in the FBI's bizarre and unrecorded interview of Hillary Clinton during the last campaign, and he's putting out anti-Trump text messages with a colleague. Think about that one. And it continues. 74-year-old James Levine, longtime music director of New York City's Metropolitan Opera, reportedly molested a boy who was just 15 at the time. So he's been relieved. I think he's been relieved of his duties as well. And I think the list goes on. Here's another one of them. Sergio Jose Martinez, deported 20 times to his native Mexico and arrested at least 13 times in and around the sanctuary city of Portland. But he kept returning to the USA. He's finally been sentenced to 35 years for sexually assaulting 2 women. Amazing. What else do we see in the news as we continue going on here? I know there's some other good stuff. This isn't a good one. U.S. sends stealth fighter jets to Korea. Pentagon has dispatched 6 F-22 stealth fighter jets to the Korean peninsula where they will participate in joint drills with the South Korea Air Force. The United States also will be sending other advanced fighters and bombers in an impressive display of air power. And the Alabama race, we're looking at, about a week from tomorrow is the election there. Roy Jones versus Judge Moore. We'll see what happens on that one as well. People know the story. Let them decide. That's their choice. They can make the decision who they want to vote for. And why should the Congress get in the way when the people make up their mind and decide what it's all about? Just a thought for you. Unbelievable right there. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Good morning. Shout outs. Allison, Mitchell, Brandy, Casey, Pam, Bobby Joe, Diane, Arn, good to see you there. Michael, Craig, Tony, glad to see you. And Robin, glad to see you all with us this morning. When we come back, 5 reasons to sell this winter. Things to avoid when shopping for rewards card, personal credit cards, and help fund your side gig. We'll talk about that as well. And should I get an FHA loan, conventional loan, all that and more? You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rates subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 0186. Call 800-306-1990. That's 800-306.
Doctor, nurse, or teacher. If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission, lending partners will give a credit at closing, the title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions for you. So think about this. I had this conversation, an in-depth conversation with a gentleman over the weekend talking about the current tax bill. And one of the issues, and I just shared with you how you can find out exactly how the tax bill will impact your family. Again, mbelinks.com/tax. mbelinks.com/tax. And it'll get you the information on the current tax bill. So, one of the things that I wanted to chat about was the idea of maybe you have to always understand what is important, or what are they looking for? What are the tax bills attempting to deal with? And the current tax bill, they want to deal with business. Yes, they want to give everybody a tax break, but one of the big issues that they're looking at is how do we give an incentive to business to hire more people and to invest in in the U.S. economy. So the two ways they're doing that, number one is they're doing it through, and you have to understand a little bit deeper on it, is they're doing it through reducing the corporate income tax to 20%. Now, corporations do not pay tax. No matter what anybody wants to tell you, corporations do not pay tax. They collect tax and send it to the government. So regardless of what they do, they're building a widget. It doesn't matter whether it's a sign or the computer or the case for my iPad right here. If you're watching us on TV, I got my props. But on all of those different issues, the companies that make them collect taxes. What do I mean by collect taxes? Well, they know that everything they do has to finally get to a net bottom line of income in order to keep their ownership or shareholders happy. So if there's a 20% tax, it's just a line item on the expense side of the profit and loss statement as what's going on, an expense. Very, very simple. You have an expense for rent, you have an expense for manufacturing, you have an expense for labor, you have all these different expenses, electricity, doesn't matter. Throw them all in there, and then you have to say, okay, I'm going to mark up the product or service that I sell to cover all of those numbers. And it doesn't matter, even your toothpaste that you're using, Procter & Gamble has to cover for their taxes in that tube of toothpaste that they sell to you. So you are paying that tax for them. 20%, then you pay the tax after you already went and earned your hard-earned money and paid your taxes on it. So you're getting double taxed. Now, the pass-through entities, that would be the LLCs, the LPs, the S corporations. Those are called pass-through entities. What they're doing is they tax the ownership at the rate of the entity. So if you've got a small business or mid-sized business that are operating as an LLC, LP, or an S Corp, your tax rate will be 25% of whatever you're earning, whatever that pass-through number is of the income of the bottom line. So does that tell you that if you're a high-income earner, maybe you can save some tax money by creating a business entity? So if you're a real estate professional, maybe instead of getting a direct 1099 from your company, maybe you get a 1099 goes to an entity that you create that goes and does all of your marketing and pays for your advertising and pays for your printing and pays for your expenses to go and show homes and list homes and stage homes and cleanups and repairs, all these different expenses that go into your business. And then you get taxed on the bottom line pass-through portion of the entity. Save yourself some money. Now, when you're doing that, maybe you're going to be looking at credit cards that are going to help you in those areas. So if you work a side gig to earn extra cash outside your full-time job, you might want to consider getting a credit card solely for business expenses. This helps keep your business and personal life separate and makes it easier to report business activity for federal and state taxes. For most freelancers and sole proprietors, a regular business credit card is overkill. A personal credit card can meet your professional spending requirements and earn cash back to help you afford your side business. So let's talk about 4 personal credit cards to help fund your gig. Discover It Cash Match, 5% cash back on up to $1,500 in quarterly purchases for rotating bonus categories, 1% cash back on other purchases. Or you might want to look at the Costco Anywhere Visa card, 4% cash back on up to $7,000 in eligible cash purchases, 3% cash back at restaurants and on eligible travel, 2% back at Costco and Costco.com, 1% cash back on other purchases. The City Double Cash 18-month BT offer, 1% cash back on all purchases. Now remember, some businesses, you can put almost everything you do on the business entity. So just think about that part of it as well. If you can do everything on your business, on your credit card. I mean, I was involved in a company many, many years ago where we were able to put a $600,000 expense right on our credit card. Think about that concept and then start getting these cash back rewards or bonus points. Those are all issues that happen on a regular basis. So think about how they might impact your business. That is the Your Credit Matters segment, again brought to you by creditsanitizer.com. So I wanted to chat with you this morning a little bit about the concept of an FHA loan or a conventional mortgage. What are they, who benefits, and how many people are getting bum information still? This drives me crazy. I can't tell you how nutty I go. Well, a lot of people understand how nutty I am. But how nutty I go when we start talking about the misinformation about business, about down payments. Lot of phony information out there. No, it's not fake news. Don't go putting that in the text box over there and sending that to me. But the idea is how much phony information there is about what's going on in various business areas when it or down payment areas. I'm sorry, I was thinking about business about the prior segment. But the down payments. Think about those issues. 6% is what they tell us is the average down payment now. 6%. What loans do you have that are able to get you into these different areas? The FHA loans and conventional loans remain the most popular financing types for most mortgage borrowers. But which program makes the most financial sense for you? So we look at the FHA loan versus a conventional loan. The key to deciding which loan you should get is understanding both programs and how they relate to you specifically. You could be a good candidate for either program, so let's chat about them. Credit scores. FHA loans, they'll go down to a 500 credit score in some instances. Conventional loans, you generally want to be 620 and above. On credit history on the FHA loan, there's a shorter wait times after derogatory credit events like foreclosure, short sale, bankruptcy, and divorce. Contrarily, on the conventional loan, it's a longer wait time after those derogatory credit events, though some lenders may be flexible depending upon the circumstances. The down payment on FHA, you can go as low as 3.5%, conventional as low as 3%, although you do get advantages if you go with a higher percentage. On either way, even if you go up to 5% down, you can get some benefits to your interest rates and your pricing. Mortgage insurance. So FHA requires 2 different mortgage insurance payments. They've got a 1.75% upfront premium. Generally, you can finance that into your loan. And then they're going to require a 0.5 or 0.85% is going to be the 0.85 is where you are on a monthly premium or the annual premium, divided out by the months. If you put down a larger down payment, it may go down to 0.8. And the conventional generally can have a one-time payment, but more often than not, you're going to see monthly premiums in the right around 0.5%, give or take, a little bit. Once you get to 20%, it's waived on the FHA. They take it off. I'm sorry, on the conventional. FHA stays there forever, or until you refinance, restructure. Is it bad to think about restructuring? No. You should have a game plan. This should be a planned process right from the very beginning. So many people, I look at them and say, something, if you can get in on an FHA program and it's going to cost you less money down and you can give less requirements, just understand the game plan is to get rid of the mortgage insurance. You're going to be looking to get rid of the mortgage insurance as quick as you can on either program. So you have to just look at what the numbers and what makes sense for you and your family. That's what we like to do. I'll send you, anytime you want, just call me or email me or text me, and I'll send you a free report that'll compare 2 different loan programs side by side and show you what they do for you. Even if you want, we can compare a loan, any loan, with renting. So we call that a buy versus own report. And it's very rare that I find out that it's not beneficial for you to buy. Generally, and we look at like a 9-year time frame on these because we know that that's how long you're keeping your house right now. 9 years is the average 10 years. So we do our report based on 9 years. $300,000, $400,000, $500,000 in difference by owning a home versus buying a home. Why do you think that later today we'll have our new guide out, things to consider when buying a home? You can text HBG to 79564, HBG to 79564. We'll send you that new guide when we release it later today. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. More greetings, Marie, Alan, Lisa, Cheryl, Glenn, glad to see all of you with us. I think there's some more here. Maurice, Edwin, glad to see all of you with us. Tell a friend about Ron Siegel Radio every morning, 9 to 10 a.m. When we come back, 5 reasons to sell this winter. We'll chat about them. And what is an estate plan? We'll talk about that as well. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details. 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender. Licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel lending team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. In the Mortgage Minute today, the Real-Time Real Estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. NEST, N-E-S-T, to 79564. So reasons listing your home for sale this winter makes sense. Number one, demand is strong. The latest buyer traffic report from the National Association of Realtors shows that buyer demand remains very strong throughout the vast majority of the country. These buyers are ready, willing, and able to purchase and are in the market right now. More often than not, multiple buyers are competing with each other to buy a home. Take advantage of the buyer activity currently in the market. Number two, there is less competition now. Housing inventory is still under the 6-month supply that is needed for a normal housing market. This means that in the majority of the country, there are not enough homes for sale to satisfy the number of buyers in the market. This is good news for homeowners who have gained equity as their home values have increased. However, additional inventory could be coming to the market soon. Historically, the average number of years a homeowner stayed in their home was 6, but has hovered between 9 and 10 years. I shared that with you in the last segment since 2011. There is a pent-up desire for many homeowners to move as they were unable to sell over the last few years because of negative equity situation. As home values continue to appreciate, more and more homeowners will be given the freedom to move. The choices buyers have will continue to increase. Don't wait until this other inventory comes to market before you decide to sell. Number three, the process will be quicker. Today's competitive environment has forced buyers to do all they can to stand out from the crowd, including getting pre-approved for their mortgage financing. This makes the entire selling process much faster, much simpler, as buyers know exactly what they can afford before home shopping. According to Ellie Mae's latest Origination Insights report, The time to close a loan has dropped to 44 days after seeing a 12-month high of 48 days in January. Number 4, there will never be a better time to move up. If your next move will be into a premium or luxury home, now's the time to move up. The inventory of homes for sale at these higher price ranges has forced these markets into a buyer's market. This means that if you're planning on selling a starter or trade-up home, your home will sell quickly and you'll be able to find a premium home to call your own. Prices are projected to appreciate by 4.7% over the next year, according to CoreLogic. If you're moving to a higher priced home, it will wind up costing you more in raw dollars, both in down payment and mortgage, if you wait. It's time to move on with your life is number 5. Look at the reason you decided to sell in the first place and determine whether it is worth waiting. Is money more important than being with family? Is money more important than your health? Is money more important than having the freedom to go on with your life the way you think you should? Only you know the answers to those questions above. You have the power to take control of the situation by putting your home on the market. Perhaps the time has come for you and your family to move on and start living the life you desire. Just a pretty simple thought process. Give me a call at 800-306-1990 if you want to see about a game plan. Same number if you're looking for a rent versus own analysis. If you want to know dollars and cents, no hype, no BS, what makes more sense for you and your family, again, just give me a call at 800-306-1990, or you can just text me or email me, Ron at RonSiegelRadio.com. We'll get all that information off there to you. That is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. And again, if you're thinking about selling, a little later today, we will be releasing the new our things to consider when selling a home. It's our quarterly winter guide that we put out just for your benefit. So before the break, we started a conversation about the FHA loan versus the conventional loan and what makes more sense to you and what the differences are. So the FHA loan generally has a lower interest rates than conventional loans. And then on the contrary, the conventional loan is a little higher. I'm going to share with you, don't get caught up in the FHA the interest rate issues. A lot of people really get caught up in that, and it bothers me to no end that they think about interest rates when interest rates are only a small piece of the puzzle. Why do I say that interest rates are a small piece of the puzzle? What really matters is the dollars and cents. What's the number that goes on your check? What's the number that goes on your dollars and cents on your bank transfer if you're doing a bank checking? Either way, it's really more important to know the bottom line. So don't get caught up in interest when you have to. If an FHA loan, you're looking at the lower interest rate, I get it, plus their mortgage insurance, which in many instances is higher than the conventional. So now you look at the conventional and add their mortgage insurance, and look at the total payment, what makes most sense. So the way to get a good gauge of that, the way I like to, mortgage or your principal, interest, and mortgage insurance compared to principal, interest, and mortgage insurance from product to product. The taxes will be the same regardless of product, and the insurance is the same regardless of product. So what's really important to you is principal, interest, and mortgage insurance for both. Debt to income ratio. The FHA allows debt ratios higher than conventional loans, although the conventional loans are getting a little bit closer. The time for approval, they're basically the same. There's not a whole heck of a lot of difference in the two of them. The FHA loans are insured by the Federal Housing Administration. Borrowers must pay mortgage insurance. FHA does not issue loans. They are insuring the remainder of the down payment, or the remainder of the 20% down payment that an investor wants to feel secure in making a loan. So let's think about that one. That insurance that you're paying for, say you put down, I'm going to use 4%. It's a round number. It's easier for me. I'm a simple guy. So if you default on that, then FHA has to come in to make sure that the investor has 20% equity in the property. That would be their exposure is 16%. Right? Because the difference between your 4% down payment to 20%, 16 is what that exposure is. That's why you're paying the upfront mortgage insurance premium of 1.75. That's why you're paying the annual mortgage insurance of 80 or 85 basis points, just a little bit under 1%. And remember, on the FHA loan, that stays on there forever. Mortgage insurance payments makes FHA loans pricey. However, the program is flexible for home buyers with lower credit scores. Additionally, co-signers are permitted, and the wait time requirements for approval after short sale and bankruptcy tend to be shorter than they are with conventional loans. Should you get an FHA loan? Well, the program makes sense when you have little equity to work with or a unique financial situation. You'll need at least 3.5% down payment to purchase the home. That can come from gifts as well. If somebody likes you a lot, they can give you a gift. If they like me, they can give me a gift. Just saying. Program will go as high as the maximum loan limit for the county where the home is located. For example, in Orange County, I think it's $635 right now, but in Riverside, it's $355, give or take, roughly. We'll talk about the nuts and bolts of the conventional loan when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. We'll also talk about what is estate planning, all that and more. You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by our friends at Gold Star Mortgage. When you are ready for that next mortgage, Gold Star has the programs for you. They even have the Fast Pass loan approval. We've talked about that in the past as well. Fast Pass loan approval. Maybe save you $10,000 to $50,000 when you're buying or selling, when you're buying a new home. Just think about that. That's all you need to know. Do you want to save $10,000 to $50,000 potentially? Think about the Fast Pass loan approval. Give me a call at 800-306. I'll put you in touch with the right folks over at the Siegel Lending team to see what we can do about helping on that matter as well. So what is, I'm trying to find our report is in here. What is estate planning? That is the subject of today's Word on Wealth segment. What is estate planning? So we're looking right now, the tax plan that's going through the House, it's going to a conference committee now, and then it'll come back to both the House and the Senate to see if they can get it passed. But the estate plan may or may not be going away, but you still need to worry about what's going on in the states, especially when you're dealing with Taxofornia. There may be additional taxes that you can find in Taxofornia. So what is estate tax planning? And I should share with you, if you want to find out what your family's tax liability is or could potentially be under the programs from both the Senate and the House of Representatives. You can text right now, tax plan, no space, tax plan, to 79564, tax plan to 79564, and you can find out what, just put in a few basic numbers, see if your family will save money or won't save money. So what is estate planning? And for a young working person, hard to imagine and save for the future. Retirement and death seem light years away, but it's essential to calculate the savings you'll need for retirement and begin the process of estate planning. If you aren't properly prepared, financial uncertainty could plague your retirement and the lives of those you leave behind. These aren't just concerns for the wealthy. Even if you don't have $1 million home or a hefty bank account, you should take steps to ensure that you can retire the way you want and that your assets end up where they should. Estate planning is the series of preparation tasks that dictate how your assets will be divided upon your incapacitation or passing. Put simply, estate planning means electing heirs for the property and wealth you will leave behind. This ensures that your loved ones receive your assets instead of the probate lawyer, the IRS, or the state of Taxofornia. Beyond creating a will, estate planning includes assigning a power of attorney, a healthcare proxy, and to make decisions on your behalf, creating trusts, establishing guardians for living dependents, appointing or updating beneficiaries on life insurance plans and retirement accounts, and setting up funeral arrangements. Estate planning also involves preparing for estate taxes, which may mean scheduling annual gifting. So what is an estate? Everything you own is part of your estate. That means property like real estate. In addition to cars and other valuables, your estate also includes financial products like stocks, bonds, life insurance, retirement savings, and bank account. Things you share like joint accounts count too. Even if something only has sentimental value, you'll want to specify its bequest. Do you need an estate planner? Well, in most instances, you should. Do you really want to do these things on your own? It can be overwhelming. Could be. You can get a do-it-yourself estate plan. I prefer you call Al Manfrey. He takes care of that for a lot of Ron Siegel Radio guests. But draw up the last will and testament. And you should name an executor, assign a legal guardian for any minor children, and establish any necessary trusts. Your will doesn't account for everything. Now you'll need to review all your plans, accounts, and shared assets to assign and update beneficiaries, assign a power of attorney and healthcare proxy. Write a letter, ensure that all documents are organized. It's an ongoing process. You can't do it, set it, and forget it. Doesn't work that way. Couple tips, talk about it. Though it may seem like an uncomfortable conversation to have with your loved ones, it's crucial to ensure that everyone is on the same page and that your survivors fully understand your wishes. Take steps to minimize taxes. If you don't want your estate gobbled up by taxes, plan ahead. You can gift portions of your estate in advance to heirs or set up a trust. When in doubt, get help. Talked about that many, many times. That is the Word on Wealth segment, again brought to you by our friends at Gold Star Mortgage, the only source for the Fast Pass loan approval. Just give me a call at 800-306-1990. I'll put you in touch with our friends over at Gold Star if you need some assistance there. Nuts and bolts of conventional loans. We've been talking about the FHA loan versus a conventional mortgage. What are the nuts and bolts of the conventional loan now? So the lion's share of the mortgage market goes into conventional loans. These loans, while the most popular, also contain tighter qualifying guidelines than FHA loans. Generally, minimum credit score 620 with conventional loan. Wait times after short sales and bankruptcy tend to be longer than those for FHA loans. The trade-off for these strict guidelines is you don't have to pay for private mortgage insurance if you have a high enough down payment. So even though conventional loans tend to have higher interest rates, you'll save more over the life of the loan. Should you get a conventional loan, if you have a credit score over 620, a down payment of 5% or more, you barely make the requirements for the conventional loan. Combine those with a strong employment history, payment to income ratio, and you become a better candidate for this loan. Remember, if you're considering applying for a mortgage, it helps to know not only how much house you can afford, but also where your credit stands before you begin the process. That's because your credit scores help determine what types of rates you qualify for, and you can get 2 free credit reports. Now, I've told you this one before as well. EquifaxSecurity2017.com. EquifaxSecurity2017.com. You can get a free credit report there, or get a free tracking from them all the time. So EquifaxSecurity2017.com, great resource for you to check out what makes sense for you. Again, it's all about your family. We talk about all these different things that are going on, but at the end of the day, it's about your family. That's why we've set up the link for you, tax plan to 79564. You can get a checkout right there online what the tax plan looks like for you and your family. Tax plan, 79564. You can also text tax plan to or go to mbelinks.com/tax plan. And that'll give you the same link to a calculator that you put in your specific information. Don't listen to what everybody else has to say. It's all about you, your family. When you put in your specific information, then you're going to find out, does the tax plan save your family money? And we heard this once before, and I shared this many, many times.
But we have to pass the bill so that you can find out what is in it.
Right, and that was a Nancy Pelosi quote or a commentary from around the time of the Obamacare. Well, now you don't have to worry about that, right? Because now you can actually go through and check out this whole thing right now for your family. And you can look and say, okay, this is what it does for my family. Because it doesn't matter what the talking heads say on the news. It doesn't matter what you hear on the sound bites from every different senator who's got an agenda, every different commentator with an agenda. It just doesn't matter. What matters is your family. So go to tax plan, put in a scenario, and see if it works for your family. See what your family's saving. Dig out your last year's tax return. That's all you have to do. Dig out that tax return, and then go to tax plan and put it in there. Put the data right into the calculator. I'm going to do one right now, right live online. Now, take this from someone who knows. Never ever do things live on a web base. When people are watching, or when you're live online, it's bad news, right? So I'm going to put in here that the tax plan. I'm going to put in here a $120,000 income earner in the state of confusion, married with let's put in there, yes, that they itemized last year, and the itemization was for interest. And let's just say they had $18,000 in mortgage interest deduction, $1,500 a month. And we'll say on there that there were property taxes. Let's throw in there $5,000 for property tax. I have no idea where we're going to end up with this. And we're going to say two children under the age of 17. So we put in $120,000 that they itemized last year, $18,000 in deductions, $5,000 in property taxes. What do the results come up with? Well, it looks like under the House plan, savings of $941. Under the Senate plan, $342. Just think about these different numbers, folks. So far, every time I've put something in here, we've come out with a savings. I'm going to go back and do one again, because I did have a client that came up, and let's see if I did this right last time. Married, filing jointly, and no kids. And this was $185,000. Married, filing jointly. So they lose between $100 on one program and $250 on the other. Not really a big deal, is it? Just a thought there. Hey, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only talk about things that affect your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun, have a great day. We'll talk to you next time on Ron Siegel Radio.